All right, we're back. So, yeah, Winnie, let's talk about life insurance. Exciting, right?
I know it seems like the most boring subject, but the more you learn about it, it's kind of interesting. I
Yeah, it can be. I mean, you can do a lot with it. I think a lot more than most people realize. A lot of us think, well, I've got life insurance through work, or I got some, policy when
Mhm,
I was a kid. My parents got me, for 15 grand or whatever the case may be. But
mhm.
really there's a whole lot of noise about life insurance, but there's a whole lot of, I guess, just lack of awareness on what you can really do and how much of a dynamic financial tool it is, as far as building wealth, protecting your family, protecting your assets, protecting you from taxation, all kinds of things. So when people talk about life insurance, what's the first thing that you think of?
Burial, funeral expenses, or actually even before that, typically if you die young to help take care of your family, that's probably the first thing I think about.
That's good. Most people don't even think of that. I mean, they think, okay, well, I'm going to need 100 grand, and for, let's just be honest. For working class, everyday Americans out there, making between, call it 60, 70,000 to 150, plus or minus somewhere in there. Wow, I've got, a couple $100,000, or maybe I do, one X of my income through work. My wife's doing the same thing, or my husband's doing the same thing, and you think, wow, I may be set, right? The other thing is, listening to the gurus out there, talking about buy term and you don't need anything but term, is a horrible mistake. So let's kind of break those down a little bit. So the first thing, looking at how much do you actually need, and it's different for everybody. There's not a magic, pill out there that one size fits all. Same thing with financial planning, right? But you look at, what is it supposed to do? Well, I like to use the analogy that life insurance steps in when you step out, right, to
Yeah.
take care of your responsibilities and things like that. So you look at what we call the dime formula, okay? And that's going to be, all your debts are paid off. That way, the surviving spouse or partner isn't left, kind of holding the bag with all your debts. It also is income replacement. I mean, especially, when you made the comment, if you're young, you've probably got 20 years, 30 years of income coming into that household that's going to be gone now.
Yeah.
Not that you need to go out that far. Usually we look at 5 to 10 years of income replacement, about 75% of the income, because you're not there to spend any money, but that's a big piece of it. Lastly, or, the M stands for mortgage, to make sure the house is free and clear. So if you do have young kids, they're not only losing a parent, now they lose all their friend network and everything else, because they've got to sell the house and move because mom or dad can't afford it on their own, because most of us are dual income families. And then lastly is the educational needs and final expense.
Mhm.
So basically you add all those numbers up, and that's kind of what you need, right?
That's it. But not all what everyone thinks is everyone, you know, thinks term insurance, it's cheap, you know, the gurus say that's all I need. so,
Well, and
um,
that's true. Yeah,
yeah.
and you look at that and it's like, okay, well, why would I need it? I heard, permanent insurance is expensive and stuff like that. Not
Mhm,
really, depending on what you set it up for.
mhm,
And, you look at the average term policy is going to be 20 to 30 years. Less than 2% of those
yeah,
policies actually pay a death benefit out.
right.
And so if you're paying, call it $40 a month, you do that for 30 years or even 20 years, that's a lot of money that you just
Mhm.
spent, and literally you get nothing for it.